G'day and welcome to this week's video and the first video for 2021. Happy New Year to everyone, and thank you for support over the years. I've been giving a fair bit of thought to what the market's been doing and asset allocation. They're key discussions I have with clients on a daily basis. People investing into term deposits and cash know they're going to have a pretty rough ride in terms of very low interest rates for a long time to come. We always have discussions around investing into property, negative gearing, which for those that have watched a few of my videos know that I'm not a fan of either investing into property or negative gearing particularly, and comparing that to investing into businesses, and even reflecting on some of my own decisions with the concerns around the coronavirus, where we've made decisions to sell out of a particular business, and in doing so I'm actually betting against human endeavour. And what I mean by that is the teams of people behind each and every business that are passionate, working hard, often are the founders, the people that created the business, that their job in life, in what they do and what their passion is, or what all their energy is directed towards in a professional sense, is about improving products and services. So this video is about that. I've covered off on a fair bit of ground already, but let's just work our way through. What I've always spoken about is what drives asset valuations, and that is the bottom line, the profit that comes through. And what drives growing profit? Well, that's growing revenues. So businesses that sell more of their products and services by improving them over time will ultimately increase their revenues and profit growth. Now, this gives you a look at Magellan Financial Group over the last 5 years. You can see on average that they've increased their revenue and profit growth by their earnings, their profit, by 20% per year. For the preceding 5 years prior to that, that figure would have been substantially higher when the business was smaller. So, these are an amazing set of numbers, and these numbers can be seen across multiple different businesses, particularly ones that have scale, and tech businesses fit beautifully like that. If you think about Google and Amazon or Microsoft, where these reoccurring revenues and the highest quality products and services in their sector have had substantial revenue growth over decades. So that's Magellan Financial Group, a business that we're a fan of. No debt, cash in bank, and a very scalable business. So the key to obviously profit growth is the key to asset valuation. So what's going to drive an asset to go up, and what has driven Magellan to go from $1 to $50 over the last 12 years? Well, that is increasing revenue and increasing bottom line, increasing profit. And obviously dividends play a part in that. But at the end of the day, what drives the growth? It is people working hard in the business to improve the products and services. And looking at Magellan, and one thing I've spoken about a lot in recent times is that reinvestment. So reinvesting back into the business, sometimes at the expense of a high dividend, is about reinvesting back into products and services, to sell more of what they do. And it's the drive of the people, the creativity and the passion and the love for their job that does this. And like Magellan, like many other businesses, a lot of the people that run these businesses, that founded them right at the beginning, actually have no financial incentive from having enough money to retire. They're already there. It's about the passion for the job, the game of being in business. So every time that we decide to make a certain decision in our investment world, we're betting against human endeavour. And what I mean by that is my decision to sell a business for my clients, and I get the odd one wrong, which I have done recently, where we sold IDP Education. I had great concerns around, no issues with the business, but I had concerns around COVID and the ability for students to travel and to go and do university, which is a key part of their business. So in selling that business, I've also gone against a whole group of people, the managers that are running this business, to make it a better business on a day in, day out basis. So that's me betting against a business based on COVID issues rather than not liking the business. I think it's a fantastic business. if people choose to hold excess cash and term deposits well above their comfort levels, you're again betting against people that it's in their nature to improve what they do on an ongoing basis. To invest into a property, and the reason why I've included property, if you buy this property that I'm in here or a residential rental, as a general rule, it's very hard to have an increase in profitability, increase in rent. Now, there's a few anomalies at the moment with COVID and particularly regional areas that people are getting much higher rents than they have done in the past. But this may well be a short-term thing, or at least I hope it is with COVID. But with a property, as a general rule, you get an increase in your lease by the same amount as the CPI, the Consumer Price Index, which is the increasing cost of living. So generally you don't get much of an increase, and you definitely don't have a team of highly qualified, intelligent people trying to boost up that income for the property. It's more dictated by supply and demand. And for me here in this business where we lease the office that we're in, our lease goes up with CPI, which is probably running about 1.5% at the moment. So from an investment point of view, you need to consider your actions and whether you're betting against human endeavour. And in my belief, that's why investing into businesses via the share market over the very long term has always provided the best results for investors over a 10, 20, 30, 40 year time frame. Thank you for listening. Hope that's valuable, and thank you for support. We'll see you next week. Cheers.